Do you need answers for insurance questions like, filing my tax return this week, why did I pay a penalty for health care even though I had coverage? Or, I heard I could get a brand new kitchen if my kitchen burns down. Or how about this question? If I have a bunch of personal items in my car and someone breaks in and steals it, my insurance doesn't pay for that stuff. The answers to these questions and more will be discussed tonight on Understanding Insurance. Today's Thursday, April 18th, 2019, and welcome to Understanding Insurance, a live video blog brought to you by Guyor Insurance Agency and IBU. And I want to say thank you for joining us. I really appreciate that. And I'm going to try something different this time. I am basically going on my personal Facebook page and going to try to go this route instead of doing it through my Guyor Insurance Facebook page. But again, I appreciate you joining me tonight. My name is David Guyor. I am the owner of Guyor Insurance Agency and IBU. And what I want to do and what the purpose of this video blog is to help. I want to help folks in trying to get through this life that we have, which is we all have this product. It's insurance. So today, our topic is going to be healthcare. What changed for 2019? And our other topic we're going to cover tonight is homeowners insurance claims. How, what's, and whys. But first, do you guys remember this TV show? This was Hank Lawson. He was a brilliant doctor who, and this was on USA, who was found it hard to get a job after one of his patients had passed away. And so his brother, his name was Evan, took him to the Hamptons of the home of the rich and famous out there, and he had a little temporary breakdown, so his brother Evan had him come out, and while they were at a party, Hank saved this person's life and became a local celebrity. And so, you know, the millionaires in those areas, the rich and the wealthy, wanted him to be kind of like a concierge, someone who specifically worked for them. And I guess that's where I'm trying to go with all this, is that what our purpose, or my purpose is for this, is I want to not only help and educate y'all, but I want to prove to you I need to be your insurance agent. Let's call it kind of your own concierge for a life insurance agent. And you're probably going, why do I need one of those? Well, let's just be honest. Most of you, well, I should say all of you, have some sort of insurance policy. If it's a homeowner's, if it's an auto, if it's life insurance, health insurance, if you've got any toys, you have these products, and you have to use an agent to get to these products. Now, you can call an 800 number and get one of those folks, but most of us have a local agent, either being a State Farm, Allstate, and so on. But here's where I'm going with all this. When you call because you have a problem, who do you call? That's the key thing. Who do you call? When you have me as your concierge insurance agent, when you call, you get me. Only me. That means I service you. No receptionist, period. And I walk with my clients hand in hand through the insurance problems and claims, personally. Why? Because you're my client. I'm an independent agent. I find the insurance carriers that I choose to do business with, and then I place your insurance through those carriers. So you're, in a sense, my personal client, and I want to help you and retain you as a customer. Okay? So if you have to leave a message, which I understand, you know, phone rings, so if you do have to leave a message, understand this, and this is something a lot of folks don't get anymore, and that is, you get me. You don't get a receptionist because I don't have one. So if you do call and you get a message, just leave a message and I'll get back with you. But this video blog, that, like I said, is to help educate you, make you aware of any changes in the insurance world and how it could affect you, and hopefully you will utilize this format that I'm doing, which is this live video blog. You're able to log on, see me live, and I've got my phone on over here. I do have it set up here, but you can actually text me any of your insurance questions. If it's on our topic today or not, I'd love to answer that, as well as, let me get my buttons on, you can reach me at either an email address or my phone number, which again, I've got this on, so you'll be able to text me and I can see that instantly. But I'd love to be your agent, and I want to kind of get into today's show. I do know that we had a few things, but first, let's cover the news. All right, insurance news that matters. Okay, what's going on in today's world? Well, this week we have the federal officials acknowledge that Hutchinson bureaucratic train wreck is what they're calling it in Medicaid caused significant coverage loss. So what is going on is you know, there's always going to be something, sorry, I'm pushing buttons. There's always going to be something going on with between the Democrats and Republicans, but this was originally reported by a reporter for the Democrat Gazette, and it says, on a court filing by the Trump administration, which blamed the state's conceived requirements that Medicare beneficiaries report their work activities only via glitched website for the massive loss for coverage that followed. So what happened is Medicaid, we don't have that necessarily for the ACA or the Affordable Care Act. So folks that are in low income that qualify for free health care, they were assigned, you could get this coverage through any of the carriers, Blue Cross, Blue Shield, and that. And these were the AW or the AW1s. And what that stood for is Arkansas Work. And so what happened was there was a lot of folks that claimed very low or no income. And because of how the ACA and the Obamacare plan worked, is they were able to get free health care. In doing so, one of the things that Asa Hutchinson said is that, hey, you can get this free health care, but you're going to have to go out and work. And doing that, if you can't get a job, we understand, but you need to do like what unemployment used to be. You have to send in, go to the website and send in who you've called on. And so this U.S. District Judge last month halted Governor Hutchinson's so-called work requirement program, which deemed, and this is their words, that certain Medicaid beneficiaries fell off the paperwork on a monthly basis. That they couldn't get onto the website, and so they lost coverage. Now, the Trump administration, which approved the waiver for the Medicaid rule to allow this program, the first of its kind, and we're just a few, I think there was like 9 states that chose not to take the government's Medicaid program, but to do a our own health care for the needy, had appealed this district judge decisions and found that the federal officials failed to engage with the risk of significant loss. So basically, Trump gets involved. He's a little upset with our governor, but they claim that there was over 18,000 Arkansans who were stripped from their coverage. So, of course, the media got a hold of this and really kind of ran our state down in Asa Hutchinson. And it was really because of a glitch on the website. Hey, all of us know that when you get the government involved, things don't always work. So they've done away, the program's still going, but what has happened is now folks can call in. I don't know if the coverage was ever awarded back, but yeah, Asa Hutchinson got in a little bit of a mess there. Our next story is Arkansas judge refuses to dismiss claims against oxycodone drug makers. It says an Arkansas judge has requested to dismiss the state's lawsuit against 3 drug makers that alleged they made false marketing claims about the benefits and risk of opium, a contributor to an increase in opium abuse that has led to overdose deaths. So basically, the state, let me see, so an Arkansas judge was refused to dismiss this claim against these drug makers. So the ruling first reported that by the Arkansas Democrat Gazette said that lawmakers' lawsuits allege fraudulent makers of this opium, anything to do with opium, not a failure to comply with the labeling request, and that thousands of similar lawsuits are pending nationwide against dozens of drug makers, which Oklahoma won like $270 million for their state. So we're going to have to wait and see how this all plays out. I'm not too sure that our government's not going to try to get their piece. If y'all remember the tobacco industry and their false claims on the labeling of cigarettes, and because of that, the U.S. government got involved, local governments, each state governments got involved, and they sued the tobacco company. Kind of sounds like the same thing's going to happen here. And then these states are going to be awarded millions of dollars, and then it goes in the general fund. So that's kind of what's going on in the news this week. So it's a mess. But we want to move right along to this week's show and covering our topics, which is the first one is healthcare. What changed for 2019? But first, let's answer our first question of tonight. The question I had posed was, filing my taxes this week, why did I pay a penalty for health care even though I had coverage? Well, as you can read right there, those of you who remembered the Obamacare and how things were before Trump came in, there was a tax penalty, and that penalty was imposed to any American who did not have a group plan, had to have an Obamacare plan. Now, for our state, we had a private option which said that we could go through Blue Cross Blue Shield, Qual Choice, the United Healthcare, and we could buy a ACA plan, and it had to comply to the ACA laws. But the question about filing taxes, if you were like me, it says you might have been one of those like myself to be fined for receiving too much subsidy money from the government to help pay for your health care plan. And so what happened here? Basically, we had, this was the last year for a penalty, but this isn't about the penalty. This is where most Americans fail in not going back to your agent. Again, another reason why I brag on myself for being your agent is, how many of you had claimed on your tax return that you made X amount of money? Now, understand how the ACA plan worked. Was the plan, the cost for insurance, health insurance, was based on 2 things: how much money you made and how many dependents were in your household. And so if you had somebody that, if you paid a penalty this year, it will be the last year for our penalties, which was 2.5%, or I think a maximum of like $3,000 for family. But you still have to comply with telling the government how much money, if you're getting subsidy money. So basically, you get a plan, it's $1,000 a month when you use easy numbers. If you have X amount of people, quite a few people in your household, and you make a certain amount of money underneath the poverty level, you're going to get subsidy money. It's not anything that you can do to change it. It's just how the law was written. And I'm one of those folks. Based on how many people I have in my household and the income that I make, I get subsidy money. So if you were filing your taxes, and I waited till Monday to get mine in, first time in years, there were two things that happened. One, I made a little too much money. I'm a 1099 folk, so that means I'm self-employed. All my income comes through a 1099. And so I underestimated, because remember, for the filings we did this Monday, tax season, that is for taxes, that's money that we earned in 2018. But we had to estimate in 2017 during open enrollment, we had to estimate, those folks that are like me with 1099s, we had to estimate how much our income was. And if you try to cheat the system and say, well, I didn't make that much money, then it gets you Monday, which would have been April 15th of 2018. So if you had one of your kids come off your tax return as a dependent, that was me, or you made a little too much money or underestimated, that was me, because I'm straight commission. I just have to estimate what I think I'm going to make and pray and hope I don't make too much, because it'll hurt me, and that's what happened to me. So if you're one of those folks that I think I got hit with $500 or so of getting too much subsidy money, that's what happened. If this is confusing to you and you have an ACA Obama plan, call me, email me. I will be glad to talk to you personally and kind of explain what happened and what you can do to make some changes. And hopefully, hopefully you won't have that happen again. But if you, again, I was talking about the penalties have gone away, which also Trump said that we no longer, let me get my stuff up here, for 2019, we don't have any penalties. And again, that was brought to us by Trump that made those changes. So we do have a plan now. You don't have to go through the ACA plan. If you're a healthy individual, you can get one of these limited duration plans. This is actually Blue Cross Blue Shields, and I've been kind of talking about it because it's a great plan. I mean, if you're healthy, these things are like 2/3 cheaper than what the ACA or Affordable Care Act is. So please, again, give me a call or something, and I'll see what we can do, get you a quote, and let you know if there might be a better, easier way. The next topic we want to cover today is, let me get over here to my slides. Let me see, getting ahead of myself. So the ACA plan, what's changed, we've already explained that. So I want to answer this other question we had today, which was, I heard I can get a brand new kitchen if I have a kitchen fire. Or how about this question, if I have a bunch of personal items in my car and someone breaks in and steals it all, my insurance does not pay for that stuff. Well, let's answer our first question. The first question again was, I have a brand new kitchen, and if I have a kitchen fire, I get a brand new one. The answer to that question is maybe. Don't you love insurance agents that say that? Maybe. So you might be going, okay, what's up with this? Well, there are a few things that we need to determine for the outcome. The first thing is something that most, if not all, homeowners or even renters don't understand about insurance. It's called co-insurance. It's a co-insurance penalty. And what this means is, I actually built a slide. I want to show this to you. It's a penalty that the insurance companies pose onto someone for underestimating the value of your home or your stuff. So this is very confusing when you look at it and you're like, okay, what is all this about? Well, let's use David's formula. This is not my formula, but this is the way that I explain to people. So what you do is, if you have a home and you say, hey, Mr. Agent, I need this much coverage, that would be the DID, which means, hey, Mr. Insurance Agent, I want you to put this much coverage, insurance policy on my stuff. And then what happens is the insurance company itself actually deems what that should be, and then you times that by what the loss, so if you happen to have a loss, and then you minus it by your deductible, which most people have $1,000 or sometimes $2,500, and then if you've got a co-insurance percentage and all that, so you're still kind of rolling your eyes going, what's going on? This makes sense right here. So let's just kind of use this. If you have a home and you tell the insurance agent, hey, I just want $100,000 on my home. And what we're answering is that question is, do I get a brand new kitchen out of this? So you have a home that you're telling the insurance agent, just give me $100,000. But in reality, the insurance company says, hey, with labor cost, material cost, it will cost us $150,000 to replace that house, or so on. So you take that $100,000 divided by the $150,000 that it should have been insured for, and there you get the little equation, the 0.66. And let's say you have a fire, and that fire, oh, look at that. That's nasty. And that fire has destroyed just the kitchen there. Well, if anybody have built a house or knew anything about remodeling a house, these fires like this can cause a lot more damage than you think. That doesn't include the smoke. So back to our formula, let's say that kitchen's going to cost $30,000 to replace. So you take that 0.66, which is the factor difference between what you insured the house for and what the insurance company said you should have, and you're going to end up with $20,000. And let's say your deductible is $1,500. That seems to be the average going that I'm seeing on my end. So you deduct that, you're only going to get $18,500. That's it. That's it. And so this is the thing that catches most people by surprise, is that it's not the insurance companies are mean people. I always tell people, we have homeowners, auto insurance, health insurance, toy insurance, life insurance. We have all these things. All the insurance companies it's a for-profit industry, but it's a way for us to take that risk and move it on to somebody else. So it's a for-profit business. So when you see these penalties come up and you're like, well, gosh, I'm only going to get $18,500 for this kitchen fire, and it's going to cost me $30,000. What went wrong? Well, one, the agent wasn't looking out for you. There are many different ways an agent can write a policy. Our biggest problem is people are always saying, I need it cheaper, I need it cheaper, and we try to strip things down, and then when something happens, then we're at blame. And I'm kind of taken up for all agents, is because it's a tough industry to be in. We're forced by the insurance companies, not me, but if you work for a captive agent, to keep selling, how are we going to have time to sit down and explain the details of all this stuff? So get with an agent that you trust. That's the key thing. Don't be calling these 800 numbers and trying to figure out this stuff on your own. The other thing is we've talked about this in past shows, and that was what the difference is between replacement cost and actual cash value. That's a big difference in insurance. And that's going to lead into our next question, which is car break-ins. The question is if I have a bunch of personal items in my auto or my car and someone breaks in and steals it, my insurance company or my insurance does not pay for that stuff. Well, the answer to that question is, again, maybe. Auto insurance only pays if the items in the auto are factory installed or they're attached. So that's the key thing. Things like your stereo or a spare tire. There's not really much that isn't factory installed or that it's attached inside. And we're talking about someone breaking in. So when you have items like radar detectors, personal items like laptops, cell phones, your purse, or I have a client who we had to make a claim, Margaret. She had Christmas gifts, and she was the unfortunate, and these thieves, I'm telling you, it's frustrating because they always seem to find a new way, and us consumers never find out, the honest ones. But she was at our local mall, Christmas shopping, had not only her personal items, but she had Christmas items in her vehicle. She hits her little key fob, locks the door. Well, now these thieves have these little remote control devices that captures that code, and that's what the police were telling her when she made a report, that they captured that. And when she walked off, they had to be fairly close to her car, and they had used that capturing device and was able to open the car, because they didn't break her window or anything, but they stole everything she had, Christmas items and all that stuff. So when we talk about ACV and replacement costs, actual cash value is what that item is worth now. So let's say I always use items like that. So let's say I went out and bought this pen last year and I paid $1. An ACV, actual cash value policy, will pay me 50 cents for this. It's depreciated over a year. But an RC plan, a replacement cost policy, that pays to put me back where I was. So if I paid $1 for this last year, today it costs $1.25. That's what the insurance company has to pay. Pay a little bit more, not much, but it's worth it. So to kind of conclude today's show with things like, what do we do in this situation? You basically have to use your homeowner's insurance. And your homeowner's insurance is the part that is going to pay for items that are not attached to the car. So that's what we did for Margaret. We just made a homeowner's claim. She did have a replacement cost factor in her policy. We were able to use that. She paid the only thing. She had to pay the difference with the deductible. You have to pay your deductible. But the items were replaced, and to toot my own whistle, I walked her through all of this, and it went smooth. So I know I try to get these things over with fairly quickly. This has been about 30 minutes, but I appreciate you tuning into tonight's live video blog. If you find some information that was helpful, then good. I did my job. If you are a little dissatisfied with your agent, or let's say you just want to get a quote, please contact me. My contact information is right there. I appreciate you watching our video blog. It is every week at 8 p.m. on Thursday. And again, I appreciate you watching, and we will see you next week.